MayJune 2017, we're now looking at question number 1, the bank reconciliation question. Again, it's a short question, 24 minutes, 20 marks, and we need to draw up journals, the bank account, and the bank reconciliation statement. That's what's asked for in the question. Question 1, they give you a list of balances, totals. They told you compared the cash journals to the bank statement. Then there's a bit more information there. Required is very important. So you need to draw up a solution for the required according to your disclosure, okay, IFRS. That's all they gave you here. So we need to go, when they?
Like the way you gave it to us, that was simpler.
Simpler as in what, format?
Yeah, the format.
Possibly, but we're still going to follow the same format. We're just going to draw up those accounts. So when we look at A wants what? Journals, receipts and payments, and they only want the bank columns though, properly totaled as at 31st of August. So cash receipts, you'll have date or day, you'll have details, and you'll have only bank. That's all they wanted, right? That's what they said in the question. Right, so there's your first journal, and then you're going to need another one for cash payments. Cash payments journal, date, details, bank. Okay, just to revise. Cash receipts and cash payments, they're journals. Journals are internal records of the business. In a bank reconciliation question, you're trying to confirm what you've got in your books to what they have in their books. Okay, because it's internal and external records. If both of your records reconcile, then you've done the bank recon correctly. That's what you're trying to do. Right, so I've got my receipts journal and I've got my payments journal. I know I'm going to be starting with total, and then I'm going to have adjustments. Then I'm going to have to draw up a bank T account. So the T account I'm going to draw over here. Debit side, credit side. And this is what you'd be drawing in your answer book. Okay, they give you folio paper. You'd have to draw this up for yourselves, and that was B, bank account in the general ledger. The last required solution that they want is the bank reconciliation statement, and that's on this side. And I would do this on a separate page. So I would do these two on one page, I would do this on another page, and I would do this on a separate page. So if you need to do workings, you've got space to do workings if you need to. Right, you probably won't need to, but you never know, just in case. Bank reconciliation statement for 31st August 2016. Okay, you'd also have the dates here as well. So you could have cash journals here for year ended or month ended. Same thing, 31st August 2016. Right, what does the reconciliation statement look like? Well, 2 columns, one for debit and one for credit. And that's it. Looks very similar to a trial balance. Okay, and you always start with balance as per the bank statement. Because, can I change the bank statement balance? No, what I get from the bank is what I get from the bank. If I'm not happy with the bank balance because of errors or other reasons, then the bank needs to change it. We can't change it. So that's why you start with the balance as per the bank statement, and you're going to reconcile to your books. Right, so there's your answer. Okay, in terms of template, you've got A, you've got B, you've got C. Now we need to go to the question, and we need to look at the information. Okay, so question 1, the following information came to light when comparing R's cash journals with the bank statement. Okay, so you're comparing internal with external. okay, or external with internal, depending on what you've got. Number 1 is balances. Where do balances go? Beginning of the month. So the bank account in the general ledger had a favorable balance. If bank is favorable in the bank account, which is here, is it going to be a debit or a credit? It's going to be a debit because it's seen as an asset. So you're going to have 1st of August, balance brought down, and 4152. You've also got the bank statement favorable balance of 15,559 on 31st of August. Where do you put that balance? In the bank reconciliation. There's the balance as per the bank statement. Here's the balance as per the bank statement. Okay, remember, theory is important. When you have a favorable bank balance, does the bank owe you or do you owe them? The bank owes you. So the bank will have a liability, you will have an asset. Does it make sense? Okay, so would you see a debit or a credit in your bank statement? You would see a credit for a favorable bank statement balance. Right, because you guys have bank accounts. Your bank account would want a credit, not a debit. Credits are good, debits are bad. Okay, how can you remember? Think about debit orders and credit. Okay, is a debit order good or bad? Yeah, a debit order is bad. Right, you don't want more debit orders. You would want more income. Alright, those are 2 easy marks. Now you've looked at number 1. Number 2, totals in the cash journals. Where do they go? They go here. You need to start with something. In the cash receipts, you had a total of 33912. In the cash payments, you had a total of 12335. Got that? There's the totals. You need to start with something. Make sense? Great. Now we need to compare what we have in our books to what they have in their books. So comparing the cash journals, which is our records, to the bank statement, which is the bank's records, the following differences were found. The first bullet, a debtor D paid that directly into the bank account. If they pay it directly into your account, whose books are correct? The bank's. If the bank's books are correct, do you adjust or reconcile? You adjust because your books aren't showing the deposit. Because the bank has shown it, you haven't. So where do you show a direct deposit? Cash receipts. Next, the bank erroneously debited R's account with a check amounting to 1150 drawn by L Limited. Okay, we're looking at R Limited, that's our business. So are we supposed to be paying this check? No. Whose check is this? L Limited's check. It's not ours. So what is the bank going to do? Apologize and fix the mistake. Does that make sense? Adjust to reconcile? Reconcile. Bank error. Okay, incorrect debit or incorrect check. The check was for 1150, so the bank is going to say, sorry for debiting your account with someone else's check. Let me give you back the 1150. That's going to boost your balance. Next, a check for 3677 received from or on 17 August from P, a debtor, was returned by the bank, marked RD. When you see RD, you know this is a dishonored check. Where do dishonored checks always go? Always go cash payments. Good. It will never go anywhere other than check RD, cash payments. Langeni. Okay. Mount, what is it? 3677, that's it. Right. Check RD, always cash payments. Next. Items on the debit side of the bank statement not yet recorded in the cash journals. Whose books are correct? The bank's. Is the bank accounting for these expenses? Yes. You're looking at your bank statement and you can see all these different line items. Do you account for those line items as well? Yes, you should. Okay, I don't have them yet, so I'm going to record them. Bank charges, receipts or payments? Payments. Checkbook charges? Payment again. You can group all of these as just one line item, bank charges, and add them all up. I prefer showing them separately just in case. And interest on a favorable bank balance, good or bad? Good. Receipt or payment? Receipt. Happy with that? Okay, so now we've recorded all of that. We've adjusted our books because our books needed to be fixed. A debit order for motor vehicle insurance 5760 payable to I appeared on the bank statement but not in the cash journal. Whose books are correct? The bank. Adjust or reconcile? Adjust. Next one. Cash sales of that entered into the cash receipts journal on this date was only deposited at the bank on the 4th of September. Whose books are correct? The business. Has the bank shown this amount? No, because it's only going to be processed next month. So what is that going to be viewed as? An outstanding deposit. Okay, if you go to the bank on the last day of the month, you're not going to see that deposit for that month because it's going to take maybe a few hours or a day to clear. Does it make sense? Good. Right, so the outstanding deposit is going to eventually go through, and when it does, your bank balance is going to go up. Then you've got some checks at the bottom. The following checks were not yet presented to the bank for payment. So if they're not presented for payment, they're outstanding. Reconciling item or adjusting journal entry? Reconciling item. Outstanding checks. 395. 395 was on the 23rd of August. Then you've got January 2016. Okay, January 2016, look at the date. Is that within 6 months? No, it's greater than. Okay, so the first check is outstanding because it's the 23rd of August. Right, so that one we'll put here. This one, though, the date is important. What are we focusing on? We're focusing on August. Right, January to August, how many months ago? More than 6 months. What happens to checks when they are older than 6 months? They become stale. Stale checks always go where? Cash receipts. Okay, because you're undoing a payment that didn't go through, that will never go through. And the last one, it's in July, so July is still part of August, it's still outstanding. Okay, and that's it. Now you've looked at the question. All you need to do now is go and sum up what you've got here. Okay, so what do? I sum up the receipts and the payments. Receipts will increase the bank. Okay, receipts increase the bank account. Journals get posted to the ledger. Payments will decrease the account. Assets will decrease on the credit. Okay, once you've got debits and credits, you need to balance this account off. Which side is bigger? The debit side looks a lot bigger. So sum up the debit side. Okay, that total you want on both sides. Then you'll have a balance carried down and balance brought down. Okay, so carry down balance will be the total minus that figure. And there's your closing balance for bank. Okay, so now we need to check, does our reconciliation balance? Well, looking at the bank recon, the same thing applies. You balance this account off. Which side looks bigger? This side looks bigger. Yes, I need to put that in. 390 was 669. 669, there's it there. Okay. Alright, so I want the same amount of both sides. Okay, so this minus that gives me that figure. Is it the same? Yes, it is. Okay, so ideally you want to see this balanced with that, then you know you've gotten 100%. Okay, 18689, 18689, perfect. Save. Happy. Alright, so that was another 20%. Now you've passed the exam. Okay, you've got question 1, you've got question 2, you've got question 3. It's enough to pass. No, you wouldn't want to leave. You'd still do the other questions, but at least you're feeling confident, you're feeling better. Makes sense. Okay, let's look at number 4 now. Posting from the subsidiary journals to the general ledger. Notice this is the longest question, so it's going to be the most difficult. I'm posting journals to ledger, so it's T accounts. So let's look at it. There's it. Yeah, it is a trust account. Yeah, there are always trust account questions in the exam papers. That's also something that you could maybe identify. Okay, so now you've got question 4. You know it's 28 marks, and they've given you some information here. A trial balance. They've given you business bank, trust bank. They've given you the creditors, the trust creditors, the client control, and then some other accounts as well. Then they've given you additional information. They've given you the journals. Trust receipts, trust payments. Business cash payments, fees journal. What do they want? There's the required. Okay, part A. Open the following ledger accounts in the general ledger of B as at that date, and post journals in addition, additional information 1 and 2 above to the ledger accounts. Okay, that's pretty straightforward. First things first is to get your answer sheet up and running. Question 4, new page, drawing up, T accounts for all of them. One, two, three, 4. Okay, so there's a T account, there's a T account. Okay, so trust bank accounts, business bank accounts, client control, trust creditors, and fees. Okay, so that's what you need to draw up. 5 separate T accounts. Please note, all accounts must be properly balanced. Okay, that's fine. Commence the general ledger accounts with the opening balances given in the trial balance above. That's fine. Okay, prepare all the accounts in the format illustrated below. See, they've given you formats. Okay, so dates, details, amount. Part B, calculate for each trust credit the amount that should be transferred from the trust bank account to the business bank account. Okay, that you'll do later on. You first need to complete the T accounts. Okay, so I'll be looking at completing this first, 20 marks, before you look at the 8 marks. Make sense? Okay, so let's go back and let's go down the list. Right, so get your easy marks. Trial balance. Trial balance means opening balances for the month, because end of March is beginning of April. Make sense? Great. So the business's bank account has a balance of April. 1st April. Balance brought down. $6,100. Okay, trust bank account. Same thing applies there. Okay, if it's a trust bank account, do you agree? You're keeping funds inside that account that belongs to who? The client. Okay, revision. Right, so this belongs to the client. It's the client's money. Okay, it's still an asset though, but it's an asset that is owed to the client. Trust creditors control. Trust creditors, and you've got the client control. So in the trust creditors, you have 2 of them, G and J. You can group them as one, so then I would show this. Adding. 3800 plus 2500 gives you 6,300. Okay, so 6,300 is the opening balance for your trust creditors. Okay, then you've got your client control. Same thing applies, add up. 1180 plus 17 plus 1350, close brackets. Okay, 4,230. That's the client control account. Then you've got capital, they didn't ask for. Equipment, didn't ask for. Law, library, no. Sheriff, no. Station hand, no. Right, so those are all the easy marks. Getting opening balances to start with. Makes sense? Okay, now what do? We need to look at the dish information, and we need to post the information through to our T accounts. Okay, so what is the trust receipts journal going to record? The money that we receive from who? The client. Whose money is that though? The client. It's not, we're not entitled to it in terms of income. Does that make sense? Okay, that's important to remember in terms of theory. Okay, so your trust cash receipts journal is going to increase your trust bank account because they would be entitled to more. Okay, they have more resources. Do you agree? Okay, so the trust bank account, how much was the trust bank account? Do they give us a total? Yeah, they do. Okay, trust creditors, 12,000. Do you see that? Okay, so
we post it to the trust bank's account.
Yeah, because the trust bank account will go up. Do you agree? And who's this money owed to? Your clients. Okay, so there's the debits, there's the credits. What's wrong? Wrong month. Oh. April, not August. Okay, great. Right, what's next? Trust cash payments. What's happening here? Why? Exactly. Right, so the client's money is being used to do certain things. Do you agree? Okay, so this will decrease your receipts and decrease your liabilities, basically. Okay, because they don't owe you more; they owe you less now. Right, so trust creditors amount. Yes. Trust creditors here. 4870. Okay, so there's the debit, there's the credit. Makes sense. Everyone's so good so far. Okay. Next, business cash payments and fees journal. Okay, do you have a business bank account? Yes, you do. So, CPJ. How much do you have? Well, sundries and bank. Bank is going to go down by 5650. Happy? Okay, next, fees journal. Oh, hold on a sec. This was for total payments. If it's a payment, it would have affected other expenses. Okay, that's it, yeah. Okay, fees journal.
Why did we only record 5650?
Because that's the bank amount, that's the decrease in the cash.
And why did we add the sundries at the bank?
Sundry is for the stuff that we're debiting. Okay, so we credit the bank and we're debiting all these other accounts. Does it make sense? Okay, because why? Whose books are we looking at? The business. Okay, so fees journal. If it's the fees journal, income or expense? Income. So it'll go on the credit side. Okay, the fees journal, you've got clients control and you've got all of those individuals. And you've got fees here. Okay, what is that representing? The sum of those two amounts. Okay, in other words, how much did each of those clients, let's say, pay you in terms of their fee? Does that make sense? Okay, so let's go and insert that. Fees is seen as income. So you debit the whatever it is. In this case, client control accounts. Right, like a debtor. Debit, debtor, credit, sales. Okay, so in this case, they're dealing in books, I think, and then we've sold some ahead of time. Okay, so this would have been 30th of April. See workings. How much? 2,960. Make sense? Where did that go? Oh, it was on that column. What was my fees? Ooh, I think I lost the figure there. Okay, it's back. Right, because remember the fees is looking at what? This bit. Where was it? No, we didn't draw it up. It was in the question, I think. Yes. Okay, so when working out the client's control and the trade creditor's control, you've got other separate line items in the actual account that you would have to use to calculate the profit or the loss. Okay, so maybe just to show you that, in the trust bank account, you've got trust creditors. In the business account, you've got business related, and in the branches account, you'll have branches specific accounts. Okay. All right, so let's record that. Control account going to go up or down? It's going to go up. No. Let's think about this. It's a client control account, so if it's a control account, did I buy, did I sell? This was what journal? They don't say. It would increase an asset. You're not receiving cash though, so your creditors control is just going to increase. So 30th of April, this would have come from, where does this come from, guys? Think about it. It's a client, right? Yeah, it's client control, or fees in this case. Alright, so the client's control is going to go up by 1180 plus 1700 plus 13,050, right? If that's correct. Yeah, that looks right. Oh, the last figure is not right. Too many numbers. 1350, that's better. Okay. There's the debit. So where's the credit going to be? Where's it? Client control, fees. Where's our fees account? There's our fees account. Okay. So the client control, the client is, we're earning fees for representing our client, and this was for day number, 30, the end of the financial month. Okay, let me ask you this. What is the client control account representing? The clients. The clients what? What account? Their debtors or creditors? The debtors, exactly. Okay, so if I'm looking at a control account, I want to know how much do they actually owe us, basically. Okay. Is that alright? Yes or no? How much does the client owe you? Yeah, they're a debtor. Do you agree? If the client is owing us, they're a debtor to the business. Make sense? Okay, so that's going to go there. Client control. Right, because it's an amount that is earned by the business. Okay. Capital don't need, equipment don't need, law library don't need, sheriff stationery don't need. Okay, additional information points. We looked at this. We recorded everything. That was the last bit that we looked at. Did I have the right figures? Let's check. Hold on, where did this 4,200 come from? It was, I was looking at this. These were the opening balances. Yeah, sorry, I can't write down the same amount twice. That's wrong. Okay, this comes from the journal. Fees, not fees journal. The transfer. Where was that point? Business CPJ, trust, fees journal. The 2,960, which I recorded. That was that figure there. That was for the trial balance, which is the client's control account. Client owes us, so that's fine. We've recorded that there. That was the client control. Yeah, that's fine. Okay, so this was actually for the opening balance. That shouldn't have been there. Okay, it's for the opening balance. Okay, I was reading this up here, which wasn't right because we were supposed to look at this, the fees journal. Okay, the fees journal has 2,960. That's fine. Okay. Right, so we've recorded that, we've recorded that, we've recorded that, we've recorded that. The following general entry or general journal entry must be made. So M is a client, interest is received. Interest received on account in arrears. So what does that mean? Income or expense? Let's think about it. Okay, you're saying income, why? Okay, so the client is going to pay us more in the future. Right, so the client's control account must go up because of interest that you've received. Okay, it's outstanding. Okay, so the amount there was 150. Right, and then you'd obviously credit the interest received. Okay. What else do we have here? Let's check. That's it. Okay, so all we need to do now is balance off these accounts. We've been given those balances. Now we need to make sense of all the data, all the information. Okay, so question. Businesses, bank account. Is that going to pay anything else? No, it won't. Okay, so if it doesn't pay anything else, you can then balance this account off. Do you have any total receipts though? No. Should you? Yes, you should. Okay, total receipts not given. If we don't know what it is, we'll assume 0 then. Okay, which side's bigger here? Still the debit side.
So why are you writing total receipts where we don't have?
I'm just showing it because it would be part of a bank T account. Okay, does that make sense? Is that alright? Balancing that account off. Okay, with the trust bank account, okay, do you agree the trust bank account is representing how much the owners have in the actual business? Okay, and the trust creditors represents how much we've collected from them. Okay, so trust bank account is looking at the funds sitting in the actual account that can be used for distribution. Right, the client control account is representing all the clients that owe you. So in other words, it's like debtors. Okay, so to balance this account off, I'm going to sum up those two amounts. Okay, and then I'll bring down a balance. Okay, the trust creditors. Creditors do what to the business? Create an obligation. Okay, because you have to pay them back. You pay them back for their contribution in terms of capital. Right, so I'm going to balance this account off as well. Sum. Gives you that figure. Okay, so that's the trust creditors. What does that mean? That means that creditors still have funds sitting in their accounts. Do you agree? Okay, they can be used in the future. Okay, and then the fees account. There weren't any other fees here. It was a short activity. They just gave you a fees journal, so you just pull through the total. We looked at the interest, that's fine, and then they just split it in terms of different parts. Okay, so all we have to do here is just add up. There's not much to add, it's just one line item.
Hence is for 1 month.
Yeah, it's short. Okay. Right, and that's it. Balance of this account. Balance, yeah. Carry down, brought down. Trust bank account, this side's bigger, right? So I expect a debit. This minus that gives me the balance. Hold on. Yes, that's right. Okay, so balances. Right, everything okay there, guys?
You've got 30 August balance carried down. Is that okay?
Sorry, April, not August. Okay. Right, now we need to get 8 more marks. This is part A. Then we're going to have part B. Okay. Okay, part B. Calculate for each trust creditor the amount that should be transferred from the trust bank account to the business bank account after all the information in the above has been taken into account. Okay, so we're looking at individual clients. Okay, because they said for each trust creditor. Okay, so we need to analyze the trust creditors. Let's see, where are they? There's 2 of them. Okay, Jackson and Galatu. Okay.
How are we analyzing?
Trust creditors. Okay, trust creditors analysis. Okay, so currently their balances are, maybe let's do it this way. Balance beginning of the year to start off. Okay, so what did G start with? Let's go back and check. G started with 3,000. Pardon?
She wrote balance boy.
Yeah, beginning of the year.
Oh,
Yeah.
I thought it's a mistake.
No, beginning of the year. Beginning of the year. Beginning of the year was 31st of March. Okay, so beginning of the year, BOY is beginning of the year, which is 1st of August, April. Okay, yeah, beginning of the year, end of the year. So what did G start with?
Three.
3.8. And J, 2,500. Good. Okay, there's a client control account here. G and J both owe the business. Okay, so if we're looking at balancing their accounts off, we would take that into consideration, meaning that they have a client control debit balance, okay, which I would then offset here. So G would have minus 1700 and Jackson would have minus 1350. Okay, there's G and there's J. Okay, subtracting those 2 amounts because they had debit balances on the client control accounts. Right, nothing else there. Then we need to go back and look at the additional information. Okay, so trust cash receipts. Did you get more money from G? Yes. Okay, so G gave more money. G gave an extra 2,210, yes. Okay, so additional, how can I say, additional, sort of like a transfer or a deposit. Let's use that word, deposit. They give you more capital. Okay, so B we're not looking at. We're only looking at Jackson and Galatu. Okay, so 2210, additional deposit. That means they are owed more. Right, then you've got trust cash payments. Okay, if it's the trust cash payments, they're paying. Trust payments will reduce this, so minus 3870, and Jackson minus 1000. Okay, they're payments, trust payments. Right, business CPJ doesn't affect it, and then the fees journal does affect it. Okay, so fees earned. Right, so as a business, you're going to earn a fee. You're charging G 1,200, so they're going to owe you more or less. Or let me ask you this. Are you going to owe them more or less? You're going to owe them less because they owe you more. Does that make sense? Okay, so think about it. Think about it. You've got a trust creditor, which is representing what? Money that they've given to you. Is that your money? No, it isn't. Okay, but then you run the business, you do work for them, and then you have an amount that's charged in terms of a fee. Okay, so the fee would have come out of their trust creditors account. Okay, so the G would have 1260 would have come out of this account, and minus 1,700 there. Okay, anything else here? And you've got S here, and that's it, yes. Okay, so the balances, balance brackets, this is for the trust creditors at end of year is going to give us an amount of minus for that one, minus for that one. Okay, so those are your balances at the end of the period. Okay, so they said here, calculate for each trust creditor the amount that should be transferred from the trust bank account to the business bank account on 30 April, after all information given in the question has been taken into account. Okay, so there would be a transfer of 820 for G and 1550 for J. Right. Is that right? Okay, difficult one because it was T accounts. Okay, debits and credits, increase and decrease. Okay. Last question, number 5.
Just go AP123.
Yeah, that was a bit of a longer question, so it does take up more time. But remember, you made up more time from those other ones. Okay. Right, so the 6 multiple choice questions of 2 marks each, 12 marks in total. The questions are not related to each other. Only one option for each question is correct. Indicate the chosen option. Okay, so which of the following terms form part of an engagement letter? Okay, notice these are all those chapters at the end of your study guide that Unisa likes to ask. Right, do we need to define the nature and scope of the services? Definitely. Billing process? Yes, it would be part or something that you'd have to explain to the client. How do we bill? Basis of fees charged, that will be part of the engagement letter because you need to tell them how much they're going to be charged. Law practitioner's experience and ability, you need to identify yourself, so definitely. The conduct of the law practitioner and the limitations thereof. Definitely, you'd have to say what you can do, what you can't do. Okay, so looking at this, all of these would be ones that would be part of the engagement letter. Okay, just to show you all of this, it would have come up here. Engagement letter. There, engagement letter should therefore be a combination of a thorough client intake process conducted by the law practitioner. Okay, engagement letter should therefore reflect discussions with clients about nature and scope of services, yes. Base of charges, yes. Limitation of the practitioner's conduct, yes. Billing process, yes. Law practitioners who keep time records, where's the other bit? Okay, the following factors should be taken into account. Okay, maybe if we want to keep it very specific to your question, nature and scope was definitely there in terms of page 282. Okay, billing process is there, basis of charges is there, limitations is there. Okay, this one isn't on page 282. Okay, it's something additional that falls over here. Factors should be taken into account, okay, when charging fees, okay, to the client. The experience, the law practitioner's experience, reputation, and ability. Okay, personally, I would think that you would have to identify that as well in the engagement letter, because they need to know who you are and what you can do. Okay, but it's not specifically outlined here, so I don't think that they would be choosing it as an option. Okay, so having said that, I would be going with question 5A. I would be going with option number. So this one would be out because it's not specifically in the list on page 282. I would go with A, B, C, E. A, B, C, E, option 4. Okay, the next one. Which one of the following statements concerning the managing of human resources by law practitioners is correct? Okay, so managing HR. Okay, HR is like training, checking people's background, and so on. HR refer only to employed practitioners. Do you agree with that? No, that doesn't sound right. Why? HR could be deal with potential recruits. Okay, new people coming in, not people that are already in, if that makes sense.
Yeah, because it says only, and HR can't only be referring to that. It's looking at both.
Yeah, it's recruitment, it's new people.
And
Yeah, and it's also new people as well, not employed only. Okay, the human resource cycle includes, amongst others, training, evaluation, benefits, and capital. That's possible. When managing physical resources, the law practitioner should consider the advantages and disadvantages of leasing versus purchasing. That doesn't have anything to do with HR. That one's out. Financial planning requires the law practitioners to determine the best location and layout of the office space. That doesn't form part of HR. Financial planning requires that different forms of financing be considered. That doesn't form part of HR. Right, so number 2 is correct. That's the one that relates to HR. Okay. Which of the following information should form part of the partnership agreement? Okay, remember, partnerships can be formed between law practitioners. So the purpose and scope of the partnership? Yes. The names of the partners? Yes. The contributions expected from the partners? It would be something that would have to be negotiated between the partners. How much do we contribute? Duties and limitation of the respective partners? Yes. Method followed in settling disputes? No, that wouldn't be something that you would have to specifically outline. You could, but they're saying should form part of the agreement. Rules to be applied in the withdrawal of partnership funds. The formula to be applied in the distribution of profits. Okay, formula doesn't sound right. It should be profit sharing ratio. Okay, so just to show you the list here, let's go back to the partnership. Okay. There we go. A partnership agreement should include the following. Alright, names of the different partners. Names is there, purpose is there, capital is there, duties is there, method following. Okay, so all of it is covered. Rules to be applied withdrawal and formula. Okay, so perfect. It's 1, 2, 3, 4, 5, 6, 7. 1, 2, 3, 4, 5, 6, 7. Page 288. Okay, so I would have gone with profit sharing there, but formula would be fine then. Okay, that's why I say you need to stick to your UNISA study guide. Okay, because the UNISA study guide is going to test all of the theory. Okay, so this is what we're going to record. Option 4, all of it. Which of the following statements concerning accounting for law practitioners is correct? The receipts of money from the law practitioner's clients or services still to be rendered will be recorded in the business's cash receipts journal. Business's cash receipts journal, is it a business cash receipt? No, it isn't. Okay, it's not a business cash receipt. Why? It's a trust cash receipt. Payments or refunds and transfer of money from the trust account must be recorded in the business transfer journal. A transfer journal does record transfers, so that could be right. Well, let's see if there's a better answer. Business transactions that are recorded can occur for the benefit of the law practitioners. No. Business transactions are transactions that occur for the benefit of the law practitioners. No. A business transaction would be something for the business, not for the law practitioner. Okay, so that wouldn't be right. The purpose of the trust fund in a law practice is to keep clients' money for investment. No. It's to keep client money so we can do things. Okay, render the service. When the expenses of a client were paid from the attorney's business bank account, the client's account will be credited with these amounts. When the expenses of a client were paid from the attorney's business bank account. So we're paying for our customers' expenses. The client's account will be credited with these amounts.
We're not using the business bank account to pay, we're using the trust account.
Correct, that's what you should be using. Yeah, but there were some instances where you can pay from the business's account and then claim back from the customer, the client, yeah. But then you wouldn't be crediting the client's account, that wouldn't be out. Okay, so the right answer would be 2. Okay, last 2. The subsidiary journals will reflect when a transfer of funds from the trust bank account to the business bank account is recorded. Subsidiary journals. Okay, those are journals that will be identifying the actual movements in funds between the business and the client. Okay, will be affected when a transfer of funds from the trust bank account. Okay, so trust bank account, meaning client money, to the business bank account. So taking from the client money to the business's account, the transfer journal and trust cash payments. Trust cash payments, yes. Is this a transfer? Transfer of funds, yes. Okay. Which one of the following options represents all the factors that must be considered by the partners in a law practice when determining the compensation system? Okay, compensation means how do we remunerate our staff? Number of hours, definitely. Fees collected and number of hours billed. Compensation, fees collected, yes. New business generated, number of hours billed and fees collected for new business. If it's new business, it would be part of compensation, so that should be fine. Do they want us to choose all the factors? Yes, they do. So then we should have options here. Oh, there's no A, B, and C. Okay, so then we need to choose the one that's most correct, that covers everything, if there isn't an option of A, B, and C, and D. Okay, so looking at this, compensation system, let's check number of hours billed, capital contributions, years in practice, administration support, and calendar system, years in practice, and management responsibilities. Fees collected, capital contributions. I'm leaning towards 1 and 5. Let's just check it though. Compensation, there's it. Okay, when determining a compensation system. Number of hours billed, yes. Fees collected, yes. New business generated. Okay, new business generated wasn't here. So 1 isn't entirely right. Okay, associates or support staff supervised. not there. Years of practice is there. Management responsibilities is there. Okay, so the partner should take the funding factors into consideration. What did they say? Which one of the funding options represent all the factors that must be considered by the partners in the law practice when determining the compensation system? Okay, so all factors. You can see in terms of all factors, number of hours is correct. Fees collected is correct. Capital contributions is correct. Years in practice is correct. Management responsibilities is correct. Okay, so all of those are correct. Number 2, fees collected is correct. Number of hours billed is also correct. See, those two are also correct. See, that's why I think this should have been like a choose an option 1, 2, 3. Okay, new business generated is correct. Number of hours billed is correct. Fees collected is correct. It's there as well. Financial resources, that one's out. Okay, number of hours billed is correct. Capital contribution is correct. Years of practice, administration support, associates or staff support staff supervise, administration support and calendar system. No, that's out. Okay, so yeah, I don't know why there isn't a choose option. So there should have been an option here for 1, 2, and 3. Okay, because 1, 2, and 3 is correct based on page. What page is that in your chapter textbook? That was on page 289. Okay, so option 1, 2, 3, correct, page 289.